Welcome, welcome, welcome to The Deep Dive. We're here today to unpack the story of a man who possessed, well, a truly singular vision.
Yeah, someone who consistently saw opportunity where, frankly, others saw only, insurmountable obstacles.
Exactly. And who, by daring to bet on the impossible, ultimately built a fortune by trusting his gut when conventional wisdom, and often pretty much everyone else, was simply laughing.
It's quite the narrative.
So imagine this scenario playing out
Uh-huh.
back in 2009. A nascent company, barely more than an idea, called Uber, is struggling, really struggling to find its footing.
Right.
It has no licenses, zero outside investors, and the very concept of ride-sharing is already facing bans in cities before it can even, properly launch.
It seems almost destined for the legal shredder, doesn't it? Not
Yeah.
exactly the Fortune 500 trajectory.
Not at all. Yet one man, an outsider to the traditional Silicon Valley elite, looks at this fledgling, highly controversial concept
Mm-hmm.
and dares to commit a staggering $300,000 of his own hard-earned money to it.
It sounds absolutely audacious when you put it like that, maybe even irresponsible.
Toward.
$300,000 on a company that legally shouldn't even exist, facing these immense regulatory hurdles and just widespread skepticism from almost every corner.
Yeah, the tech world, the financial world.
Right. Most rational people, if they had that kind of capital, they'd be looking for something safe, something proven, something with a clearly de-risked path forward.
Absolutely.
This was, in every sense of the word, the exact opposite of that conventional wisdom.
And what's even more incredible as we stand here today is that man, Chris Sacca, is now worth an astonishing $1.5 billion.
Wow.
That kind of return, that kind of impact from a single bold decision. It truly makes you pause, doesn't it?
It really does.
It forces us to ask ourselves, in that same situation, with that kind of risk squarely on the table, would you have dared to make such a bet?
Hmm.
Would you have been able to see past the immediate chaos and the mounting controversy to glimpse the truly massive, world-changing potential hidden in that raw idea?
It's a profound question because it cuts right to the heart of how we individually and maybe collectively perceive and interact with risk and reward.
Yeah.
So this deep dive, it isn't merely about financial metrics or, dissecting market trends.
Right.
Instead, our true mission here is to try and dissect the unique mindset, that internal compass that drove Chris Sacca to make those almost, incomprehensible decisions.
Incomprehensible is a good word for it.
It's about understanding the internal framework that allowed him to consistently zig when, frankly, everyone else was zagging.
Absolutely. So our purpose today is to embark on a deep dive right into the mind of Chris Sacca. We're exploring the individual who made that initial $300,000 investment in a startup that, as we highlighted, didn't even possess the legal right to operate in many places.
Just think about the sheer audacity of that.
It's huge. That single, seemingly absurd bet made when Uber was valued at a mere $60 million, a paltry sum compared to its valuation today.
Tiny.
It didn't just pay off. It evolved into one of the most legendary, almost mythical moves in the entire history of startup investing.
It really is the stuff of legend.
It's the kind of story that gets whispered with reverence in Silicon Valley boardrooms, right? And it's meticulously documented in basically every book written on venture capital since.
And what's fascinating here is that it wasn't just Uber, which is maybe his most celebrated bet, almost cinematic.
For sure.
Sacca was among the very first to invest in a whole string of future titans that would go on to reshape vast industries. Think Twitter,
Right.
Instagram, Stripe. These were companies that, at the precise moment he invested, were so far from the ubiquitous household names they are today.
Oh, absolutely. Many conventional investors back then saw them as, quirky experiments,
Right.
niche services.
Or even just toys.
Yeah.
Certainly not as future multi-billion-dollar enterprises with the power to disrupt global economies. They were often just dismissed as fads.
Which is precisely why we're here today. This deep dive will systematically explore what truly drove Chris Sacca to embrace and take on risks that others actively, ran from.
What is he seeing?
Exactly. What unique patterns did he consistently see that maybe no one else in the room seemed to recognize? What deeply held values guided his often counterintuitive actions? And what unconventional thinking shaped his extraordinary, almost prescient decisions? We promise you, this deep dive will uncover surprising facts and insights that, They have the potential to fundamentally redefine your own understanding of risk, the very nature of wealth, and the kind of unshakable conviction it genuinely takes to not just change your life, but maybe even change the world around you.
It's a big promise, but the story backs it up.
It really does. Now let's begin to truly unpack this incredible journey.
Okay, so to genuinely understand Sacca's truly unique approach to wealth, we first have to grapple with his deeply unconventional relationship with money itself. It certainly wasn't always about accumulating billions. In fact, in the crucible of the early 2000s, Chris Sacca was far from being a millionaire. He wasn't the promising, ascending lawyer he was trained to be.
No.
He was, to be exact, a staggering $4 million in debt.
$4 million in debt. I mean, that's a truly staggering figure for anyone, let alone someone just embarking on their professional journey, fresh out of law school.
Terrifying.
And crucially, it wasn't the result of lavish spending or some wild gambling spree, which is often the immediate assumption people make when they hear a number like that.
Not the usual story.
No, this was the outcome of an ambitious, maybe some might even label it reckless, attempt to get ahead. During the heady, speculative days of the dot-com boom, straight out of Georgetown law, he decided to try his hand, with intense fervor, at day trading tech stocks.
Okay, so he dove right in. He deployed every single financial tool available to him at the time. We're talking credit cards, student loans,
Everything.
even aggressive margin trading. And for a brief, intoxicating period, it actually appeared to be working beyond his wildest dreams.
Right. He thought he'd cracked it.
His portfolio rapidly ballooned. He was riding high on that seemingly endless upward surge of the tech bubble, convinced he had the code.
But then, well, as history vividly reminds us, came the inevitable, brutal crash.
The dot-com bubble burst, spectacularly.
And Sacca lost absolutely everything he had, and then some. Not only did he lose his initial gains, but he found himself buried under mountains of debt. No job, no discernible assets, and seemingly no viable path to recovery.
It's soul-crushing, most people in that situation. They'd likely collapse, maybe declare bankruptcy.
Or at the very least hit a complete reset button, right?
Yeah.
Start totally over, probably with a much more conservative, risk-averse approach to life and finance.
Absolutely. But Chris didn't. He defied that conventional response. He didn't crumble. He kept going.
Yeah.
Fueled by a nascent but really powerful reframing of his relationship with financial risk. He picked up various contract jobs, freelanced relentlessly, total hustle.
Yeah.
And eventually, in 2003, landed a crucial position as a junior counsel at a rapidly emerging company called Google.
Ah, Google.
And this is precisely where his story truly begins its transformative shift, where that intense crucible of debt not only tested him, but also forged this brand new, resilient financial philosophy.
And this is where his journey takes a truly captivating turn, revealing a core tenet of his philosophy. Because instead of negotiating for a substantial immediate salary, which, let's be honest, would be the natural, understandable demand of anyone recovering from $4 million in debt.
Totally understandable. You'd want the cash.
Right. Sacca made a pivotal and deeply unconventional choice. He acted for equity.
Wow.
Think about the foresight and courage required to reject immediate, stable cash, a lifeline for most, in favor of something inherently uncertain.
He didn't possess some secret insider knowledge guaranteeing Google's astronomical future, right? Or at least not the kind that would remove all the risk.
No, not at all. He simply grasped one profound, fundamental truth that most people tragically miss. A truth born directly from his personal financial disaster. If you want to be rich, you don't trade time for money. You trade risk for upside.
That's powerful. And this was undeniably the pivotal decision, forged directly from the harrowing trauma of his $4 million collapse.
Had to be.
That experience, that profound failure, taught him a crucial, liberating lesson. That being broke isn't what truly destroys you in the long run.
Right.
The real danger, the insidious killer of potential, is being paralyzed by the fear of taking bold bets. He learned that actual poverty itself wasn't the ultimate threat.
What was it then?
It was the pervasive paralysis that an ingrained fear of poverty, or maybe the fear of looking stupid, can induce. And that perspective fundamentally, irrevocably, reframed his entire relationship with money and risk.
So when Chris eventually departed Google in 2007, having accumulated a few $1 million in stock gains from that strategic choice.
Yeah, the equity paid off.
Big time. He didn't do what most people would instantly rush to do. He didn't immediately buy a sprawling mansion, nor did he meticulously build a diversified, ultra-safe portfolio designed purely for capital preservation.
Nope. What he did, with deliberate intent, was build what he emphatically called a war chest.
A war chest. Love that.
In his distinct operational mindset, money wasn't merely a reward for past accomplishments, it was potent leverage for future audacious endeavors. It was quite literally ammunition for his next big battle.
And this truly unique concept of money as leverage brings us directly to that infamous moment in 2009. Uber was, as you vividly described, barely a coherent idea.
Barely. It existed in a nascent form, no physical office, no regulatory permits, certainly no clear, legally sanctioned path to widespread operation.
Right.
All the founders, Travis Kalanick and Garrett Camp, was a rudimentary prototype app and a somewhat audacious, almost deceptively simple mission to make car rides suck less.
Which, is a great mission statement.
It is. So Travis Kalanick, the more outwardly aggressive co-founder, was pitching this raw concept to almost everyone he could find in Silicon Valley. And the vast majority of established investors summarily said no.
Flat out no.
Some, incredibly, even physically laughed him out of the room. It was widely perceived as either a ludicrous joke or an outright legal nightmare, just poised to face overwhelming opposition.
But Chris Sacca did something profoundly different in that moment. He listened. And this act of deep, unconventional listening is absolutely key here. He didn't pull out complex spreadsheets. He didn't demand intricate 5-year projections or delve into customer acquisition costs or calculate projected lifetime value models. He didn't let himself get bogged down in the traditional quantitative metrics that paralyzed so many other investors.
So what did he do?
Instead, he asked one disarmingly simple yet profoundly insightful question. Would I regret not backing this guy?
Wow. That question cuts straight to the core of his conviction, right? It reveals the unique filter through which he viewed opportunity. It bypassed all the conventional financial analysis and instead went straight to a deeply personal, almost existential consideration. And that, surprisingly, is precisely how $300,000 of his own capital went directly into Uber.
Just like that.
At a time when the Nissan company was valued at a mere $60 million. It wasn't a calculable risk. It was an intuitive leap of faith born from this unique philosophical lens.
And to truly grasp the magnitude of that decision, consider this. $300,000 represented nearly 10% of his entire net worth at the time.
10%? That's huge.
This was emphatically not a small, diversified play to spread risk. This was not a cautious portfolio allocation strategy. This was pure, unadulterated conviction.
Yeah.
It was a visceral bet from the gut, meticulously informed by years of unique observation and a hard-won understanding of true potential.
Precisely. His entire financial mindset wasn't painstakingly built on conventional spreadsheets or cautious conservative calculations. It was built on a bold, overarching philosophy that money, at its highest purpose, should make audacious boldness possible. Money, for Sacca, was only truly valuable, only truly effective, when it could actively fuel something the world hadn't yet recognized, something it didn't yet believe in. He held an unshakable belief that the biggest returns, the truly life-altering ones, would invariably come from those bets that, at their inception, felt absolutely, unequivocally stupid.
Stupid. Probably.
Before they eventually and undeniably felt brilliant.
And the staggering result. That single early Uber bet would eventually go on to return over 1,000 times his initial investment. Maybe more, depending on exactly when he chose to liquidate his shares.
Just incredible returns.
It became the foundational bedrock for Lowercase Capital, a venture fund that swiftly ascended to become one of the most successful in history, boasting pivotal early investments not only in Uber but also in other industry shapers like Twitter, Instagram, Twilio, and Stripe.
Household names now. Companies that truly reshaped the very fabric of industries and, frankly, daily life. The core lesson here, transcending the sheer numbers in the billions, circles back directly to that formative experience with the $4 million debt.
Yeah, it all connects.
It imprinted upon him a timeless truth. Play safe, earn small, play smart but bold. That's how you change your life. This isn't just about the mechanics of investing in startups. It's about a radical, fundamental redefinition of money's core role. Most people instinctively use money as a protective shield, right?
To guard against pain, uncertainty.
Exactly. From inherent risk. Chris Sacca, by contrast, leveraged it as a potent launch pad, not just to propel himself, but to propel visionary founders and their ideas into realms of greater possibility, to actualize things that initially seemed utterly impossible.
So for him, money was never the static finish line.
Never. It was simply the indispensable fuel for the rocket he was building.
So after hearing that, what does this radically different perspective mean for your relationship with your resources? Are you primarily using your money as a shield for protection or as a launchpad for possibility and bold action?
It's a profoundly powerful question to sit with.
It really is. Now let's pivot and transition into understanding precisely how this unique, almost rebellious mindset meticulously shaped his unconventional career strategy. How did it transform him from a seemingly ordinary lawyer into a legendary investor, a true kingmaker in the fiercely competitive tech world?
Well, Chris Sacca was, by all conventional measures, truly an unlikely venture capitalist. He overtly defied the established mold that Silicon Valley had meticulously crafted for its elite investors.
Totally broke the mold.
He didn't attend Stanford, didn't grow up within the insulated confines of the Bay Area, and he most certainly didn't come from old money or a lineage of established tech titans. By professional training, he was a lawyer.
Just a lawyer.
But this seemingly incongruous background, paradoxically, became his most distinct and powerful advantage. It imbued him with a unique ability to discern profound opportunity, where others, blinded by convention, saw merely a job, a set of prescribed responsibilities, or bureaucratic red tape.
And that's exactly what he did at Google, right? Turning a standard corporate role into a strategic observation deck.
Precisely. When he joined the nascent tech giant in 2003, his official role was corporate counsel, primarily negotiating contracts, navigating legal complexities.
Not exactly the glamorous side of things.
No, not the cutting-edge side of a rapidly expanding tech powerhouse. But instead of approaching it as just another job, or simply a rung on a traditional corporate ladder, he ingeniously treated his time at Google like a high-powered telescope.
A telescope, I like that analogy.
He strategically leveraged his internal access to meticulously observe everything around him. How the engineers thought and innovated, the precise strategic moves executives made in crucial moments, and most critically, how and where the truly big transformative bets were being placed within the organization.
It was during this period of intense, almost anthropological observation that he gained a truly crucial insight, wasn't it? An epiphany that would redefine his career.
Absolutely. The real compounding money wasn't being made by merely doing the work, per se, or by clocking hours. It was being made by strategically owning the upside.
Equity.
Which meant, unequivocally, equity, not just salary. So, even when presented with a modest base salary, he shrewdly negotiated to take a significant portion of his compensation in the form of stock options.
Even though Google was still private, future uncertain.
Exactly. At that time, Google was still private, its future ascension far from certain to the outside world. But Sacca was never paralyzed by uncertain futures. His truly profound fear, the one that drove his every decision, was of certain mediocrity.
That fear of mediocrity again?
That traumatic experience of going $4 million into debt had seared away any lingering illusion that playing it conventionally safe was in fact truly safe.
So when Google finally went public in 2004 and his accumulated equity dramatically shot up in value, suddenly he possessed not just money, but a profound new level of freedom and strategic capital.
Right. Most people in his enviable shoes would have understandably stayed put. Google was experiencing explosive growth, basking in immense prestige, offering increasingly lucrative opportunities. It was the epitome of corporate safety and skyrocketing success.
The golden handcuffs.
Totally. But Chris Sacca, true to his unconventional nature, left. He famously articulated his reasoning. He didn't want to simply ride someone else's rocket. He harbored an unshakable ambition to build his own.
Build his own rocket, and that's precisely what he accomplished, right? In 2007, he officially launched Lowercase Capital.
And this was no institutional VC firm with a sprawling team, a network of limited partners, and those fancy, ostentatious offices on Sand Hill Road.
No mahogany desks here.
Definitely not. It was remarkably a solo venture. Just Chris, a laptop, and that highly refined gut instinct, meticulously honed by his unique observations from the inside of Google's rapid, almost unprecedented descent. His setup was lean, agile, and fiercely independent.
Here is where his career strategy began to truly distinguish itself from the rest of the pack. He didn't merely chase deals like other investors, frantically sifting through pitch decks.
No, he describes his unique process as hunting for humans.
Hunting for humans, that's intense.
His pitch to aspiring founders wasn't primarily about the capital he could provide or complex legal term sheets. It was about building deep, authentic trust, recognizing their inherent grit, and sharing his unyielding belief in their vision and capacity.
So what was the pitch?
He would look them directly in the eye and tell them, with unflinching honesty, "If I back you, I'm all in. I'll fight like hell for you. And I'll tell you the hard truths no one else will dare to speak.
Wow, that's a potent promise. Unwavering support paired with brutal, necessary honesty. A combination few other investors offered, I imagine.
Very few. And that intensely personal, unconventional, and fiercely committed approach paid off. Paid off rapidly and handsomely. He quickly became one of the earliest and most significant investors in Twitter.
When people didn't get it.
Betting on its potential, when most people couldn't even begin to grasp what the platform was truly for, let alone why it profoundly mattered. He invested in Instagram before its massive acquisition by Facebook.
Right.
And he placed pivotal early bets on transformative companies like Twilio, Stripe, and Kickstarter long before their names became ubiquitous headlines and their valuations soared into the stratosphere.
But it's crucial to remember that none of these groundbreaking deals were easy, right? Twitter, in its foundational days, was notoriously chaotic, prone to outages, the fail way.
Oh yeah, the fail whale. Instagram initially had absolutely no clear revenue model, and Uber, as we discussed, was not only borderline illegal in many jurisdictions, but also faced a relentless barrage of skepticism and regulatory challenges.
Yet Sacca didn't just survive in that chaos, he actively thrived in it.
He absolutely did. He emphatically didn't wait for market validation or external proof. He trusted his own highly refined pattern recognition. He bet incredibly early, negotiated deep for significant ownership stakes, and built real, raw, deeply personal relationships with the founders, often becoming their most trusted confidant.
One of the most famous anecdotes that vividly illustrates this is his aggressive Twitter investment strategy, right?
Oh yeah, classic Sacca. He didn't passively wait for an opportunity to knock. Instead, he proactively cold-called his way into the deal, literally tracking down individuals who were selling secondary shares of the private company.
Just dialing for shares.
Pretty much. He ingeniously raised capital from an eclectic mix of sources, friends, family, even sophisticated financial institutions like JP Morgan, meticulously piecing together nearly 18% of Twitter before its highly anticipated IPO.
That's incredible. This is far from a lucky stumble or a passive investment.
Not at all. It was an act of profound strategic aggression, a relentless pursuit born of his unshakable conviction in Twitter's transformative potential. He saw the platform's ability to shape public discourse long before most grasped its true power.
And that's the core paradox, the central tension of venture capital, isn't it? The biggest, most transformative rewards don't ultimately go to those who cautiously wait for irrefutable proof, for market validation, for all the metrics to perfectly align.
No, they go almost exclusively to those who dare to jump first and then possess the extraordinary fortitude to hold on through the inevitable, often brutal turbulence that follows. That conviction, that grit, is what differentiates the true kingmakers.
By 2015, just 8 years after its launch, Lowercase Capital was being universally lauded as the most successful seed fund in history.
Yeah, Forbes famously reported that Sacca's fund had returned over 250 times to its early backers.
250x. To truly grasp that scale, consider this. One fund alone transformed an initial $8.4 million investment into a staggering $1.2 billion.
It's almost unbelievable. This achievement isn't just about the sheer financial gains. It's about the profound magnitude of the impact that his radical early belief ultimately generated. It's about leveraging conviction into an entirely new reality.
Chris Sacca didn't build his incredible, almost mythical wealth by diligently diversifying across traditional indexes or by meticulously optimizing tax strategies like a typical conservative investor.
No, that wasn't his game. He built it by consistently going deep into high-risk, high-trust relationships and placing massive, concentrated bets on extraordinary people and groundbreaking ideas that the rest of the world hadn't caught up to yet.
And underpinning all of those audacious bets, acting as his guiding star, was that simple yet profoundly liberating belief.
If you're not willing to look stupid early, you'll never look brilliant later.
That says it all. Chris Sacca's entire career was clearly not a predictable linear ladder climb. It was instead a thrilling and often terrifying series of audacious leaps, each one intrinsically riskier, bolder, and more deeply committed than the last.
And it was this unwavering, almost irrational commitment to his unique vision and his deeply held convictions that ultimately made his path and his impact truly unstoppable.
It really makes you fundamentally reconsider your own path. What does it genuinely mean to own the upside in your own life? Are you trading your time for money, or are you strategically trading risk for exponential possibility? And where in your own journey are you genuinely willing to look stupid early for the potential of looking brilliant later? That's a powerful question to reflect on.
It is.
Now let's explore how he managed to cultivate and protect that singular edge, because Chris Sacca definitively didn't fit the typical Silicon Valley mold, and he clearly didn't try to.
He most certainly didn't. In Silicon Valley, there's an almost palpable uniform conformity that permeates everything from fashion to language. Venture capitalists often seen in their Patagonia vests. Right. Founders speak a very specific, often jargon-laden dialect, and everyone seems to implicitly follow a predictable script. Chris Sacca, by striking contrast, consistently defied this norm. He showed up always in a distinctive plaid, often embroidered, intentionally untucked, and invariably loud cowboy shirt.
Not just occasionally, but always.
Yeah.
His signature look.
Always.
And that shirt, it was far more than just a quirky fashion statement, wasn't it?
Oh, much more. It was, in essence, a visible shield. It was a clear signal. It was a conscious, deeply deliberate rejection of the pervasive uniform conformity that so strongly defined tech investing.
Yeah.
It loudly proclaimed, without uttering a single word, "I don't care what you think of my appearance, I care about substance." That, in a single powerful metaphor, is the Chris Sacca story. He never once tried to fit in. His entire being was focused on cutting through the noise and revealing the core truth.
And that deliberate, unique behavior wasn't accidental or a mere affectation, right? It was an integral strategic component of his deeply unconventional process.
Absolutely. While other investors were frantically networking over cocktails, attending industry parties, engaging in endless chatter, Sacca was doing something profoundly different. He would intentionally disappear into remote mountain cabins, completely turn off his phone for days on end,
Go off grid.
totally off-grid, and dedicate that precious, undisturbed time to reading voraciously, reflecting deeply, and thinking with unburdened clarity.
In fact, even at the very pinnacle of his investing success, he and his wife, Crystal, made the deliberate choice to move away from the relentless noise and distractions of Silicon Valley, settling onto a serene ranch in Truckee, California.
Which wasn't just for relaxation or a change of scenery.
No?
It was a strategic move designed to create an environment where he could think with absolute clarity, far removed from the echo chamber of the industry, far from the herd mentality that could easily cloud judgment.
Because Sacca had zero interest in being just another player within the established Silicon Valley scene or participating in its intricate social dynamics.
Right. His singular focus was on truly understanding people, especially founders, at their very core. One of his most striking and effective success habits was his masterful use of strategic silence.
Strategic silence. Tell me more.
Unlike many other VCs who dominate pitch meetings, filling every available moment with their own questions and comments, Sacca would often say very little, just observing intently.
Listening.
Deep listening. He'd purposefully let the founder talk, ramble, stumble, and in doing so, unwittingly reveal their true selves, their authentic motivations, their underlying conviction.
And then, after that extended period of depth listening, he'd ask that one deceptively simple yet utterly pivotal question.
Why you? Why do you have to build this?
That's the killer question. And if the answer he received was vague, clearly scripted, or sounded too safe and conventional,
He'd unceremoniously walk away. He had absolutely no time or patience for generic, uninspired responses.
but if the answer was raw, deeply emotional, maybe even desperate in its intensity, that's precisely when he would lean in, fully engaged.
Exactly. Because in Sacca's unique worldview, obsession beats brilliance every single time. While brilliance is undeniably valuable, it can often prove fragile when confronted with the brutal realities and chaos of the real world.
Right.
Obsession, on the other hand, provides the irrational, indefatigable fuel required to push through inevitable setbacks, daunting legal battles, pervasive market skepticism. That's what, in his estimation, makes a founder truly unstoppable in the early, incredibly challenging days.
So for him, startups weren't just abstract math problems on a spreadsheet.
No, they were intensely personal obsessions. He was convinced that if a founder wasn't borderline obsessed, if they weren't genuinely haunted by the problem they were trying to solve, they simply wouldn't possess the necessary resilience to survive the inevitable soul-crushing chaos of building something truly groundbreaking.
Another one of his odd habits that flew in the face of VC tradition. He famously never asked for traditional pitch decks, did he?
Right. He expressed a strong preference for simple phone calls, informal coffee chats, or even spontaneous meetings in parking lots or on trailheads.
Yeah.
He wasn't interested in dissecting a perfectly polished slide presentation.
What did he want?
His core objective was to directly feel the fire of the founder's conviction and raw passion, unmediated by corporate gloss.
And when he did truly believe in someone, he committed himself entirely, going all in.
All in, we're talking about late-night calls, intensely focused strategy sessions, meticulous media coaching, even providing profound emotional support.
Yeah, I heard stories.
There are countless stories circulating in Silicon Valley of founders calling Sacca in the middle of severe breakdowns, and him being the steadfast presence to talk them off the ledge, offering not just pep talks, but strategic reframing to help them navigate profound market rejections or internal team conflicts.
So he really became part investor, part therapist, part war general. A true conciliar in every sense. However, this extraordinary intensity and unyielding commitment, as you might imagine, often came at a significant cost. Chris Sacca developed a formidable reputation, didn't he? Sharp tongue, quick temper, relentless work ethic.
He demanded nothing less than absolute excellence, not just from the founders and teams he backed, but even more fiercely from himself. In revealing interviews, he's openly admitted to being too intense, too impatient, too hard on people.
He owned it.
He did. He once candidly stated, "I didn't always know how to turn it off, but when you're fighting to build something impossible, something truly world-changing, there's simply no off switch."
That underlying intensity, despite the outward bravado of his signature cowboy shirt, was actually rooted in something far deeper and more vulnerable, wasn't it? A profound, almost primal fear of failure.
Exactly. Not a personal failure in the sense of monetary loss, but a deep-seated fear of failing the people who had placed their unwavering bets on him, the founders who trusted their dreams to him, the limited partners who entrusted their capital to his judgment.
Right.
This intense fear drove him to be relentlessly vigilant, brutally honest, and incredibly demanding, because for him, the stakes were always far higher than just money.
To protect and cultivate that crucial edge, that unique ability to see and act, he meticulously developed a rigid personal routine. You mentioned morning journaling.
Yeah, morning journaling to process complex thoughts and emotions, long hikes in nature to physically and mentally reset his thinking, and deep, eclectic reading across wildly diverse subjects outside of the immediate tech sphere like history, behavioral psychology, complex climate science.
And this wasn't for casual entertainment.
No, it was to broaden his perspective, sharpen his intuition, allow him to identify patterns and human motivations that others simply missed. Reading about the psychology of decision-making in ancient Rome might have given him a unique lens through which to understand how founders react under immense pressure or how market sentiment shifts.
Fascinating. And above all, he cultivated radical honesty.
Radical honesty. If a startup he backed was veering dangerously off course, he wouldn't sugarcoat the situation or attempt to spin it with corporate euphemisms. He would confront the issue directly, unflinchingly, even if it made everyone in the room profoundly uncomfortable. He was never afraid to be the bearer of uncomfortable truths.
Because, in his deeply held view, the ultimate job of a venture capitalist wasn't to be liked, to be a pleasant face at a boardroom table.
No, it was, first and foremost, to be useful. That, he believed, was his paramount differentiator. While other VCs were preoccupied with building meticulously diversified portfolios and maintaining a polished, unimpeachable public image, Chris Sacca was singularly focused on building deep, unshakable convictions.
And while others fixated on building personal brands and public profiles.
He relentlessly focused on building authentic, enduring relationships with founders that could genuinely weather the most brutal storms. His meteoric success wasn't built on fleeting market trends, but on enduring truths about human nature and the relentless entrepreneurial drive.
And that, ultimately, is what made him truly unforgettable and uniquely impactful. It compels us to ask ourselves, what are your own unique cowboy shirts that signal your distinctive approach to the world? How can you purposefully cultivate deep reflection and radical honesty within your own life to sharpen your unique edge, even if it means consciously choosing not to always fit in with the prevailing norms?
It's a great question.
Exactly. Now let's explore the profound guiding compass that fundamentally directed every major decision he ever made. What gives someone the extraordinary clarity to say an emphatic yes to an idea when everyone else, every other supposed expert, is decisively saying no?
For Chris Sacca, the answer, while simple in its articulation, was profoundly difficult in its consistent execution. I bet on people, not predictions.
People, not predictions.
This wasn't merely a catchy, memorable quote he'd deploy. It was the foundational compass that unerringly guided every major decision he ever made, whether in the high-stakes world of investing or in the complexities of his personal life.
He didn't care if a startup's projected market size looked astronomically huge on paper or if its financial models promised guaranteed returns. He didn't need a founder's pitch to be meticulously polished or their business plan to be flawlessly constructed.
No. What he genuinely wanted to see, what he relentlessly searched for, was something far more rare and profoundly intangible. A founder with an unshakable, almost irrational conviction.
Right.
A human being who simply could not build this particular thing, who was compelled by an inner fire. This deeply human-centric lens shaped his entire, often unconventional decision-making process.
This brings us to his infamous rule of why you. Sacca would pose one brutal, piercing, and deceptively simple question to founders in every pitch meeting. Why you? Why are you the only person who can build this?
And if the answer he received was vague, clearly scripted, or sounded too safe and conventional, lacking genuine personal connection, he would often disengage and walk away, regardless of the perceived market opportunity. He had absolutely no patience for generic or superficial responses.
But if the answer was raw, messy, deeply emotional, even bordering on desperate in its intensity, that's precisely when he leaned in, his full attention captured.
Exactly, because in Sacca's hard-won worldview, obsession consistently beats brilliance every single time. Grit, that sheer, unyielding determination, beats pristine credentials. And lived pain, or a deep, visceral personal experience with a problem, consistently beats meticulously polished business plans.
And this philosophy wasn't theoretical, it was his lived experience, right?
Absolutely. This philosophy, it's vital to understand, wasn't some abstract theory he intellectually picked up from a textbook or an MBA course. It was profoundly forged in his own emotional scarf, the crushing experience of going bankrupt at 30.
Yeah.
Being openly mocked and dismissed for his unconventional style and appearance, and constantly being told by the establishment that he simply didn't look like a serious, credible investor.
That outsider energy.
That fiercely cultivated outsider energy, those intensely personal experiences of adversity, profoundly fueled his unique, almost uncanny ability to spot nascent greatness and genuine potential in people and ideas that were consistently overlooked by the conventional venture capital community.
It's precisely how he saw something profoundly significant, a spark of transformative genius in Travis Kalanick, who, let's be brutally honest, was and remains a brash and deeply controversial figure, even long before Uber was a fully formed company.
Right. Not an easy personality?
No. It's how he recognized the drive in Jack Dorsey and Evan Williams at Twitter, two individuals with vastly different personalities and leadership styles, that a shared burning desire to fundamentally reinvent the very fabric of human communication. And it's why he consistently chose to invest in underdog founders who resolutely didn't fit the typical Silicon Valley mold, but who burned with an undeniable consuming urgency to solve a truly profound problem.
Sacca often characterized his decision-making process as being primarily gut-driven, but he was always quick to add a crucial qualification. He emphasized that he only trusted his gut after feeding his gut with deep thinking. This wasn't a casual pastime. He read constantly and voraciously, not just about emerging tech trends, but about complex climate science, nuanced behavioral economics, intricate psychology, even ancient philosophy.
He didn't read to chase fleeting trends.
No, he read to fundamentally sharpen his intuition, to construct a vast, interconnected mental framework that allowed him to consistently see patterns and make connections that others, limited by their narrower scope, routinely missed.
He famously articulated this approach. Data is good, but instinct, thoroughly trained by diverse experience and rigorous reading, is better.
Exactly. He wasn't one to overanalyze data or run endless complex financial models. His decision-making process, while intuitively driven, was incredibly clear and almost meditative in its structure. Get quiet. Listen deeply to what's unsaid. Feel the friction, the resistance, and most crucially,
Say yes before it's obvious.
say yes before it's patently obvious to everyone else.
But that precise process, while demonstrably effective in generating extraordinary returns, was also incredibly emotionally exhausting, wasn't it?
Oh, absolutely. Because saying yes early means, almost by definition, saying yes alone. It means trusting your own conviction when no one else agrees with you, when the overwhelming conventional wisdom points decisively in the opposite direction.
Right.
And that's precisely where Sacca's inner conflict often resided. He was this cowboy with a deeply sensitive conscience, bold and audacious in his public pronouncements, but constantly wrestling in private with the immense personal weight of his decisions. What if he bet on the wrong founder? What if his ego or his innate impulsiveness clouded his judgment? What if one single bad call cost someone everything they had poured into their dream, The pressure was immense.
So how did he manage that immense constant pressure and navigate his internal conflicts?
He meticulously cultivated a personal board of values that served as his unerring compass, guiding his most important choices.
A board of values. Interesting. What were they?
His core values included radical transparency with himself and with everyone he interacted with. He unequivocally prioritized relational integrity over transactional gain, meaning he would emphatically rather lose money than betray or lose trust.
Wow.
And crucially, a defining tenet was always mission over money. He exclusively backed founders who were genuinely solving problems that deeply mattered to him, beyond just the financial upside.
This unyielding commitment to his values meant he sometimes made startling choices, turning down what appeared to be incredibly lucrative deals that simply didn't align with his gut, his intuition, or his ethical framework.
Yeah, he famously recounted saying no to a company that offered a guaranteed 10x return because he fundamentally disagreed with how they treated their employees.
That takes conviction.
He held firm to his guiding conviction. If it doesn't align with your gut, no number, no matter how large, makes it right.
And this unwavering commitment to a deeper meaning, to purpose beyond mere profit, eventually led to that truly surprising and almost unprecedented decision in 2017. Sacca quite literally shocked the entire tech world by announcing he was stepping away from startup investing altogether at the absolute zenith of his success.
Yeah, why? Because he acutely understood that if he continued to chase wealth purely for its own sake, for the sheer accumulation, he would inevitably lose the very clarity and conviction that had allowed him to create it in the first place.
So he consciously stepped back.
Not to simply relax or retreat, but to profoundly reset his compass, to find a new, even more impactful direction where his unique approach could be deployed.
Years later, true to his word and his guiding philosophy, he would return with lower carbon capital, a brand new fund specifically investing not in social apps or fintech, but in the existential challenge of climate solutions.
Right. This wasn't just about financial ROI. It was about RIP, what he genuinely wanted to be remembered for, what he'd want etched onto his tombstone.
RIP, I like that.
He articulated this powerful shift with profound clarity. I want my kids to know I bet on the future, not just on money. This radical redefinition of success, from pure, unadulterated profit to profound systemic purpose, became an undeniable cornerstone of his lasting legacy.
That's incredibly powerful, and it resonates deeply. How much are your own daily decisions driven by genuine gut instinct, meticulously informed by deep reflective thinking? What core values truly guide your most important life-shaping choices?
The heavy questions.
They are. Now let's explore how he skillfully leveraged his influence to become a genuine kingmaker, not just writing checks, but literally creating the narrative around these tech giants before anyone else could even grasp their potential.
Okay. In the intensely competitive world of startups, there exist two fundamentally distinct types of investors. There are those who passively wait for clear traction, for a company to unequivocally prove itself, for the market to validate its potential through undeniable metrics.
The follow.
Right. And then there are the rare few, like Chris Sacca, who actively create that traction, who skillfully shape the narrative around a nascent idea long before the mainstream press, the established VCs, or the general public even begin to catch on. Chris Sacca was definitively the second kind, a master architect of perception.
He didn't merely write checks, he wrote the entire narrative.
Exactly. He didn't just invest cold capital. He invested deeply held conviction, leveraging his unique, almost prescient perspective to articulate precisely why a seemingly chaotic, ill-defined idea was, in fact, brilliantly transformative. That was his true, understated power.
He wasn't powerful simply because he accumulated billions.
No. He became extraordinarily powerful because he instinctively knew who and what to believe in and why, long before anyone else in the industry did.
Take Twitter, for instance. In the mid-2000s, it was, by most rational accounts, glitchy, often confusing.
The fail whale again.
Right. No clear established business model. Even its own founders, early on, couldn't definitively agree on its ultimate purpose or direction.
But Chris Sacca saw something fundamentally different, something profoundly significant. He envisioned a platform that possessed the raw, unprecedented potential to fundamentally shape public discourse on a global scale.
He saw beyond the 140 character.
He saw a tool so raw, so elegantly simple in its design, that it could evolve into a public stage for presidents, a rallying point for protests, a catalyst for social revolutions. He saw not just a messaging app, but a global nervous system.
So he did what almost no one else had the foresight or the sheer audacity to even contemplate. He proactively cold-called secondary shareholders, meticulously buying up equity wherever he could possibly find it.
He strategically assembled a significant stake that eventually reached close to 18%, making Lowercase Capital the largest non-employee shareholder in Twitter before its highly anticipated IPO.
Again, that's strategic aggression, not luck.
Absolutely. This was far from a passive investment. It was an act of profound, aggressive conviction, with immense financial and reputational consequences for Sacca himself. It was a true masterclass in strategic maneuvering and belief.
And when Twitter finally went public in 2013, the scale of its success and his early stake unequivocally cemented his status. He wasn't just another rich man, he was publicly recognized as a kingmaker, a visionary whose early bets reshape industries.
Right. And unlike many other tech moguls who relentlessly chased headlines and celebrity status, Sacca consciously chased leverage.
Leverage over fame.
He possessed a profound understanding that his true influence didn't stem from being loud or constantly in the media spotlight. It emanated directly from being early, being consistently right, and being memorably remembered for it. That quiet strategic leverage was his ultimate currency.
But that level of influence, that profound recognition, as you might expect, certainly came at a significant cost. As his name became inextricably synonymous with early, incredibly successful bets, so too did the expectations.
Founders actively sought him out, eager for his Midas touch. Journalists quoted him constantly, seeking his often blunt, unfiltered opinions. Conferences invited him to speak as a headliner.
And eventually, even mainstream television came calling, right? Eager to capture his unique persona.
Exactly. And this widespread recognition ultimately led to his surprising yet incredibly impactful appearances as a guest shark on the popular reality show Shark Tank across seasons 7 and 8.
Which was fascinating to watch. He was, to put it mildly, entirely unlike the other sharks.
Totally. He eschewed their expensive suits, he stubbornly refused to play the typical reality TV game for cameras, and he remained consistently blunt, refreshingly unfiltered, and deeply strategic in his evaluations.
Yeah, he famously rejected lucrative deals that other sharks passionately loved, and he audaciously backed obscure, unconventional ideas that others openly mocked and dismissed.
He brought something far beyond just capital to the table. He brought unparalleled credibility, an authentic sense of unconventional insight, and a track record that spoke for itself.
Millions of Americans watched him week after week, and for many, it was the first time they truly encountered a different kind of investor. One who decidedly didn't talk like a traditional banker, didn't look like a conventional billionaire.
Rocking the cowboy shirt.
Always. But who, against all odds, consistently made the boldest and most prescient bets. The widely recognized, almost mythical statement became, Chris Sacca is the guy who believed in Uber, Twitter, and Instagram before you even knew they existed.
That's profound social influence at its core. Not popularity in the traditional celebrity sense, but a powerful cultural resonance. He transcended the typical venture capital archetype, becoming a symbol of a new kind of power, the kind built not on established institutions or old money, but on razor-sharp intuition and sheer, unadulterated guts.
But this immense influence, this willingness to speak uncomfortable truths, wasn't always smooth or easy for Chris. He was known to unapologetically clash with boards and to directly challenge founders, often speaking truths that absolutely no one wanted to hear, pushing uncomfortable realities straight to the surface.
Yes, some within the industry called him difficult, even abrasive, for his bluntness. But many more, perhaps more accurately, called him absolutely essential.
Because he fundamentally believed that true, impactful influence meant telling people precisely what they needed to hear, not merely what they wanted to hear.
Right. He would forcefully push founders to fire underperforming team members faster, to pivot their business model sooner if necessary, or even to step aside entirely from their own company if he deemed it necessary for the vision's survival.
And remarkably, they listened. Why?
They listened because they inherently understood he wasn't merely protecting his own investment money. He was fiercely, almost maniacally, protecting their original groundbreaking vision. He would tell them with unwavering conviction, "I'm not here to be your friend, I'm here to help you win."
Wow.
He understood something truly rare and incredibly powerful. That genuine transformative influence often requires a degree of discomfort. It means being willing to risk, and sometimes even strain, personal relationships for the sake of achieving superior results.
And that willingness to be the uncomfortable truth teller, to deliberately create that friction and challenge, is precisely what made him utterly irreplaceable in the ecosystem.
Absolutely. In a sea of yes men and polite agreements, Chris Sacca functioned as a clear, unvarnished mirror for his founders. Sharp, brutally honest, sometimes painful in his reflections, but always grounded in his deep conviction and unshakable belief in their ultimate potential.
And as his reputation and influence soared to unprecedented heights, Sacca did something even rarer and more surprising. He walked away. At the absolute peak of his influence, his name synonymous with groundbreaking success, he consciously stepped down from tech investing and essentially left the public spotlight.
Why? Because he profoundly understood that he didn't want his power to become predictable, to become just another cog in the ever-turning machine of Silicon Valley. He knew that to maintain his edge, he had to constantly redefine his game.
He sought to reinvest his hard-won power and influence into something immeasurably bigger.
The global challenge of climate impact, the development of next-generation foundational science, truly planet-scale bets. Through the formation of lower carbon capital, he dramatically shifted his focus and his immense influence from consumer apps and social media platforms to the most pressing existential challenges facing humanity: carbon capture, groundbreaking nuclear fusion, sustainable food systems.
Because for him, power was never about control over others or accumulating more wealth.
No, it was about setting a clear, impactful direction for positive, systemic change on a global scale.
He encapsulates this profound shift in his purpose perfectly. Real power isn't making the world do what you want, it's helping the world become what it needs to be.
Chills.
Right, and that, arguably more than any billion-dollar exit or a list of successful startups, is what truly secured his enduring legacy. It compels us to reflect. Where, in your own life, can you leverage your unique influence, not for fleeting fame or personal gain, but for truly meaningful impact, even if it requires embracing profound discomfort and charting an unconventional path?
This brings us directly to Sacca's ultimate long game, a perspective that truly sets him apart from most others in the investment world. In 2017, Chris Sacca delivered yet another shockwave across Silicon Valley.
Right, he wasn't announcing a new fund or joining a board.
No. He was, to the utter confusion of many, announcing he was leaving venture capital altogether.
The tech world was, frankly, bewildered, deeply confused. Why would someone with such an undeniable Midas touch, someone who transformed a mere $300,000 into hundreds of millions with Uber, who backed Twitter and Instagram long before they achieved global significance, why would such an individual simply walk away from that kind of success at its very peak?
But for Chris, the answer, as it so often was with him, was remarkably simple and crystal clear. He recognized he was no longer the first one in the room. He had meticulously built his colossal fortune by possessing a unique ability to spot gold, true, transformative potential long before the rest of the world, or even the industry, had any inkling of its existence. But by 2017, the game had fundamentally changed.
How so?
Every ambitious founder was now coming to him with meticulously polished pitch decks, inflated valuations, sophisticated professional PR teams. The unique edge, that almost supernatural ability to see what others blindly missed, was, for him, largely gone in that particular space.
So, with characteristic boldness, he did what exceedingly few billionaires or anyone at the pinnacle of their career would ever contemplate.
He willingly surrendered the throne.
But it's crucial to understand that this was not an exit in the traditional final sense.
No, it was a deeply strategic pivot, a fundamental realignment of his resources and his profound conviction. Because Chris Sacca was unequivocally not done betting. He was simply done betting small, done playing in a game that no longer offered the raw, chaotic energy he thrived on.
And true to that realignment, in 2020, Chris Sacca dramatically reemerged with a brand new mission, a new fund, and a rekindled fierce fire. He launched Lower Carbon Capital.
And its audacious goal wasn't to create the next viral social app or fund the next ephemeral tech unicorn. Its overarching, defining goal was and remains to directly solve the existential climate crisis.
He rapidly raised hundreds of millions, eventually accumulating over $800 million to boldly back startups working on everything from cutting-edge carbon removal technologies and innovative green hydrogen solutions.
To revolutionary nuclear fusion, low-emission concrete, sustainable alternative proteins, and regenerative agriculture. He wasn't chasing the next fleeting tech trend. He was, with profound urgency, chasing planetary survival.
He famously articulated this shift. Climate change is the biggest market failure in human history, and also simultaneously the biggest investment opportunity of our lifetime.
To many in the traditional investment community, this new focus sounded incredibly risky, maybe even idealistic, certainly not as immediately profitable as his previous ventures in consumer tech.
Right.
But to Chris, With his unique pattern recognition and long-term vision, it was paradoxically the most rational, most undeniable long-term bet he'd ever made. It was a testament to his ingrained crisis reframing strategy.
Sacca's characteristic approach to any crisis, whether personal or global in scale, was never to succumb to panic or to retreat into safe, conservative positions.
No, it was invariably to radically reframe the problem and see it through a new lens. When the conventional world zagged, he, with calculated precision, always zigged.
Not out of rebellion.
Not out of mere rebellion, but from a deeply ingrained, almost intuitive pattern recognition cultivated from his past experiences. He keenly observed that in the realm of investing, periods of crisis often serve as powerful catalysts for clarity. They ruthlessly strip away the ephemeral hype and tirelessly reveal what truly, profoundly matters.
So he rigorously applied the very same Uber lens that had served him so well in early stage tech to the nascent, complex world of climate technology.
He asked the same fundamental questions. Who's truly obsessed with solving this monumental problem? Who's directly addressing a real, painful, and often overlooked societal challenge? Who possesses the extraordinary courage to venture where others fear to tread, into unproven scientific frontiers and deeply complex engineering challenges?
And then, with unyielding conviction, he doubled down on those rare few.
While traditional investors hesitated, often paralyzed by the immense scale and long timelines associated with science-heavy climate companies that didn't promise immediate, clear returns, Sacca fearlessly leaned in.
He actively funded startups working on incredibly complex foundational solutions like ocean alkalinity.
Yeah, a process that aims to remove CO2 by increasing the ocean's natural absorption, methane sequestration, tackling potent greenhouse gases from landfills or agriculture.
And next-gen batteries crucial for renewable energy storage. These are precisely the kinds of profound problems that don't always make flashy headlines or promise instant liquidity.
No, but that, in his strategic estimation, collectively buy us crucial decades as a civilization.
Because in his expansive long game, wealth was no longer simply about generating financial returns. It had evolved into something far more profound. It was about redemption, about using his accumulated resources for the greater good.
Chris Sacca often articulates his ultimate motivation, wanting to be able to look his kids squarely in the eye and say, I tried.
Powerful.
Not just tried to get richer or more famous, but genuinely tried to help prevent the world from literally burning, to address the most significant challenge of our time.
That's the essence of legacy thinking. And that, more than anything else, is what truly separates him from the vast majority of other investors and entrepreneurs.
Most people, most businesses, play a 10-year game, maybe a 15-year game at most. Chris Sacca, by contrast, plays a 50-year game, thinking generations ahead, making bets that will only fully mature long after he's gone.
He doesn't just strategically invest in transient trends.
No, he invests in fundamental trajectories. He keenly observes where the world is undeniably going, and then he strategically invests in how we can profoundly bend that inevitable arc towards a more sustainable, equitable, and ultimately better future.
The profound result of this radical shift is that lower carbon capital has very quickly become one of the most respected and impactful climate funds in the world. Not notably because it diligently followed the market trends,
but true to Sacca's unwavering form because it actively and presciently created an entirely new market for impactful world-changing solutions.
For Chris Sacca, the ultimate goal was clearly never just to be rich, to accumulate a vast fortune for its own sake. It was always, profoundly, to make that wealth mean something, to imbue it with purpose.
His crisis strategy, whether facing personal bankruptcy or global climate catastrophe, wasn't to hoard resources or to retreat and hide from the challenges. It was rather to deploy them, boldly, relentlessly, urgently.
Because he possesses an inherent understanding that in the long game of life, what you painstakingly build, what you profoundly contribute, truly outlives what you merely own or accumulate.
As he once so eloquently put it, at some point the question shifts from how much is enough to what am I using it for?
And that, more than money, more than fleeting fame, more than achieving unicorn status, is why Chris Sacca will always matter, profoundly.
It's a truly profound thought for all of us to contemplate. What is your unique long game? How are you strategically deploying your most precious resources and your invaluable energy for something bigger than just yourself, something that fundamentally transcends immediate gratification or purely personal accumulation?
So what then is the grand synthesis of all this? Chris Sacca didn't build a $1.5 billion fortune by meticulously following prevailing market trends or adhering strictly to conventional wisdom. He didn't win by just passively reading pitch decks or simply studying financial forecasts like everyone else.
No. He won unequivocally by seeing what others stubbornly missed, and then daring with every fiber of his being to believe in it before anyone else did.
He saw profound transformative value in Travis Kalanick and the nascent Uber idea when it had no permits and was widely considered absurd. He saw genuine magic and global potential in Twitter when the world casually dismissed it as merely a toy.
Right.
And he saw an urgent, profoundly investable opportunity in climate solutions when most billionaires were still myopically chasing the next fleeting social app.
But beneath all the sensational headlines, beneath the billion-dollar exits and the iconic cowboy shirts, lies one radical, timeless, and universally applicable lesson.
Which is?
The highest return investment you can ever make in the world isn't found in financial markets. It is found, fundamentally, in people.
And what specific kind of people, you might ask? People who burn with an almost irrational obsession. People who are compelled by an inner drive to solve truly painful and neglected problems.
People who simply will not, under any circumstances, quit, regardless of the obstacles. And most profoundly, people that no one else, not a single other soul, believes in yet.
That's what Chris Sacca consistently staked his entire fortune on. And that's what we, as a society obsessed with metrics and proven success, tend to forget far too easily. That behind every seemingly overnight unicorn is often a misfit founder. That behind every breakout, world-changing idea is someone who was once openly called crazy, and that behind every legendary investor is a single audacious decision that, at the exact moment it was originally made, looked absolutely unequivocally stupid.
Sacca's unconventional wisdom teaches us that ultimate success isn't about being right the most times, or even about avoiding all mistakes. It's about possessing the courage to be right the earliest, and caring the deepest about that singular conviction.
It's also about having the profound courage and self-awareness to walk away when the game, any game, no longer genuinely feeds your soul.
And then possessing the strength to start completely over, to redefine your purpose, even when you've already definitively won.
Because ultimately, as he so wisely and profoundly puts it, at the end of it all, wealth fades. But what you dare to believe in that truly stays.
Powerful words.
So perhaps the next time you find yourself facing an opportunity that feels too early, perhaps too inherently risky, or just too undeniably weird for conventional tastes, ask yourself, what would Chris Sacca do in this exact situation?
And maybe more importantly, what would you genuinely become? What new possibilities would you unlock if you truly trusted what you see, what you instinctively know, before the rest of the world has even had a chance to see it or to believe it?
If this deep dive resonated with you, if it made you pause, if it stirred something deep within you, some quiet, insistent voice that says, I see something the world doesn't yet, something truly unique, then without a doubt, this deep dive has absolutely done its job.
Because the deep dive is never just about dissecting the lives of billionaires. It's about what their extraordinary decisions, their triumphs, and their failures reveal within us.
So let's leave you with these thoughts. What would you personally have done with $300,000 back in 2009, faced with that precise Uber opportunity?
Would you have played it conservatively safe? Or would you have dared to bet on the impossible, on the world-changing idea that everyone else dismissed?
And even more urgently, what truly significant opportunity, what compelling idea are you ignoring right now simply because no one else sees it yet? Simply because it doesn't fit into conventional boxes? If this episode sparked something profound for you, if it ignited a new perspective, share it. Not just because we asked you to, but because someone else out there, perhaps someone you know, might be just one belief away from building their own Uber, their own Stripe, or their own truly world-saving idea.
Because that's precisely where the real transformative secrets of success truly live and thrive.